NZD USD to raise higher towards 0.72 by year-end as RBNZ set to hike this fall. The Reserve Bank of New Zealand RBNZ surprised markets by leaving its interest rates unchanged at 0.25%. Still, economists didn't expect 2 rate hikes by the end of the year. In turn, NZD should benefit from an attractive carry once sentiment improves. Kiwi set to benefit from attractive carry in the longer run. The RBNZ held rates unchanged at 0.25% today, but the policy statement and the projections included in the monetary policy statement fell on the hawkish side of the spectrum. Considering the RBNZ's hawkish tone, we have not changed our view that the RBNZ will raise rates by a total of 50 BP by the year end. We expect back-to-back hikes at the 6th of October and the 24th of November meetings. We expect to see 3 more hikes in 2022, which would bring the OCR to 1.50% by the end of 2022. Today's hold from the RBNZ has left the NZD quite vulnerable in the short run to external headwinds, but in the longer term we expect the RBNZ tightening cycle to fuel a sustained rebound in the currency. This view is, however, highly dependent on some improvement in the global risk appetite and a revamp in interest for carry trade. Our current 0.74 year-end estimate for NZD USD looks less realistic after the recent deterioration in market sentiment, but a move to the 0.72 region in 4Q21 may still be in the cards. Information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only and should not in any way come across as a recommendation to buy or sell these assets. You should do your own thorough research before making any investment decisions. FX Street does not in any way guarantee that this information is free from mistakes, errors, or material misstatements. It also does not guarantee that this information is of a timely nature. Investing in open markets involves a great deal of risk, including the loss of all or a portion of your investment, as well as emotional distress. All risks, losses, and costs associated with investing, including total loss of principal, are your responsibility. The views and opinions expressed in this article are those of the authors and do not necessarily reflect the official policy or position of FX Street nor its advertisers. The author will not be held responsible for information that is found at the end of links posted on this page, if not otherwise explicitly mentioned in the body of the article. At the time of writing, the author has no position in any stock mentioned in this article and no business relationship with any company mentioned. The author has not received compensation for writing this article, other than from FX Street. FX Street and the author do not provide personalized recommendations. The author makes no representations as to the accuracy, completeness, or suitability of this information. FX Street and the author will not be liable for any errors, omissions, or any losses, injuries, or damages arising from this information and its display or use. Errors and omissions accepted.